Hello traders, welcome to our new webinar. It's Monday, May 20th. Welcome to our new session for start of the week. So let me know if everything is fine here. If everything is okay, looks like that we are ready to go. We are also streaming this to Facebook and at the same time on Twitter. So hello everyone. Now, before we start the session, please subscribe to our channel, press a like. If you watch this recording later, please leave us a comment below the video so that we will be more visible out there. Okay, now if you are maybe first time visitor, make sure to visit our website wavetraders.com. We still have this special unique offer available for today. You will get 2 months for the price of one. So if you are new first time registration, then of course this can be applied for you. Okay, now what's going on the markets? As you know, we have seen a very volatile moves last week, especially on metals. We have seen a significant breakouts on particularly on silver, but today we have a holiday in some European countries, so market conditions can be a bit thin. But even when market conditions are a bit thin, and you may experience even more volatile price action. Also, we got this week US home sales. That's probably the major economic release from the US, because focus will shift now away from the US to inflation in Canada, Japan and UK. UK will probably be the most interesting to watch. We also have Kiwi rate decision, I believe, on Wednesday. Now, if we start with silver, as you know, we have seen a pretty strong breakout here, and everyone is getting so excited about silver. We've been calling for this triangle and break higher for the last few 2 years or so, that we were tracking this consolidation, but now when we are seeing prices already moving to new high, well, we should be aware that maybe even optimism is going to increase here. And we know what this means from an Elliott wave perspective. It means that sooner or later we may see unexpected reversals, or maybe just stabilization of the current prices. I don't believe that we will see the same price action like we have seen for since March continue from current levels. Even if we will do so, I think that firstly we will see some larger corrective pose. Also, whenever you see moves coming out of a contracting range, out of a triangle, like in our case, well, you know that moves out of a triangle are final in a sequence, meaning that this can be wave C, final leg of a free wave recovery. So I'm not saying that we are turning bearish. I'm just saying that maybe going into this market right now, right here, could be very, very late. Okay, of course, there can be some interesting intraday pullbacks that you can still catch some upside here, but keep in mind that these resistance levels around 33 up to 34 are actually not that far away. You could see some volatile price move, and this will be reached in a day or two, and then you will see market reversing back to the downside. Also, keep an eye on volume. Okay, volumes can be very, very important and very useful. Usually when volumes has increased, when the market reaches some new highs, new extremes, that's typically the opposite signal. Okay, you don't want to be involved very late in this game. So if you want to trade this maybe on a short-term basis, that's completely different story. You can see some pullbacks now, and then maybe we get another push to the upside. But if you're more like a mid-term, long-term trader, then I just think that maybe it's better to wait on something bigger and don't play the FOMO here. Also, when I'm looking at maybe at some bigger levels here, that's the monthly chart, it's worth to know that we have the 61.8%, around $35 or so. Then you have the next resistance around 38, okay, which is the triangle measurement target. So this whole zone, as I said, maybe could be reached in next week, 2 weeks, and then we will see this market completing this current bull cycle pretty fast. But when looking at the COT data, we can see that large speculators, which are green, I'm not really sure. I think that that's not the latest data, because if I look here, you can see that we have managed money meaning large speculators, are around 60,000. Okay, so that was released on Friday, and here we have the 59,000. So it looks like that there was a slight increase, but we are not at that extreme readings compared to maybe data back in 2020 or maybe even here in 2017. So based on this, I'm quite surprised that we are not seeing even more extreme readings here, but possibly this will be reached in the next few weeks if we really see jump into this 35 area. Okay, so silver, definitely it's looking bullish on the short-term basis, but as I said, be aware of these big levels here. Okay, because it can be a little bit risky, but as I said, levels to watch: 35, above that it's around 38. Also, if we go further, as you know, we have been talking about the 10-year US yields for the last few weeks. We've been tracking it very closely, and we called this potential limited upside in this FIB area, and so far we have seen a very nice sell-off. Now, what is important whenever I want to look for potential top formation of wave B? The important is to see what is the substructure on a smaller time frame. Do we have 5 waves down to make sure that wave B is done or no? So if we go to the smaller time frame, which is here, you can clearly count 5 waves to the downside. So for the next few weeks, that's probably the most important price action for me. We have 5 waves down on the US yields. So after 3-wave rally, we will continue to see more weakness. And we have been warning about this potential rally when everyone was so excited about the drop potential in US yields after this CPI print came down last week to 3.4% in the US. We have seen a drop, but again, this occurred in this 5th wave. So when everyone got so excited, well, we are seeing actually market now stabilizing. But it's also interesting to watch that we have an uptrend on metals, a very strong break despite this reversal here. Okay, so I think that there can be still opportunities on the short side of the US dollar, but much better, safer plan would be when the US yields will complete this 3-wave rise. But for the last few sessions, the correlation is not tick by tick, it's not a perfect one, but we have the general view, which is the most important. We have US yields showing us a bearish pattern, so this suggests, if I add dollar index here, that after 3-wave rise on the US yields, even dollar will continue to weaken. Okay, so just keep an eye on the US yields if you want to trade dollar or maybe some other assets, because maybe this will give you some better entries or levels, or you will be much more patient when playing this market around. Okay, especially if you're more like an intraday trader here. Also, if you look at dollar index here, we have, keep in mind that we are sitting on this trend line support. Okay, so it's a bit tough situation. Also, as I said so many times, don't forget the dollar index depends on the euro, and the ECB, the market is pricing the ECB cuts for 90%, if I'm not mistaken, before summer. So I think that that's one of the reasons why the euro could be very weak compared to others. Okay, so if you want to be short dollar, maybe buying euro dollar may not be the best approach. Okay, just keep an eye on that. Also, if we break, let's say that the US yields will complete this 3-wave rise, that's when we may potentially see dollar index coming to the downside still and breaking this trend line support, and that would be quite an interesting and strong bearish evidence. Okay, why? Because if you look here, I have a potential as a primary wave count. I have a triangle here that could be unfolding an ABCDE, but what's very tricky about it is that even if it's a triangle and it's bearish, it's still ongoing, it's incomplete. I'm just afraid that we will see more consolidation through summer. We also have to keep in mind that we have these stocks breaking to the upside, potentially moving into some 5th wave, which, while the US dollar is not looking that bearish here when looking at the dollar index. So maybe if stocks will pull back, dollar index could easily stay trapped in this consolidation. But for later this year, I still think that dollar index will at some point see a strong sell-off, but I'm just not sure if that will be after ABCDE formation or after higher ABC rise. I have also another wave count here, which shows that what if the US yields will just now stay consolidating, maybe even rallying that free wave rise, and you will see ECB that will in the next month or so that they will cut rates, and that will mean that euro could fall very sharply, and possibly dollar index could actually move to the upside and potentially complete this ending diagonal. But still, that's a bearish pattern when I look maybe 4 months after summer. Okay, so I still think that that's the counter trend movement that we are tracking away from these 2023 lows. Also, looking at the euro itself here, I should somehow disable this news. I will try to make that happen by next time, because they're really annoying right now. Anyway, here what we are seeing is we are breaking this trend line resistance, so potentially we could see a bit more upside. That's maybe in the short term, that's a bullish call, but overall, what I would like to see is some very strong aggressive rise on the euro to 1.1 level to make sure that we are really breaking out. Okay, because this could also easily be a triangle. And as I said, euro dollar would not be my favorite pair to trade because of the ECB plans and these rate cuts expectations. So I'm just watching it from a distance, but clearly the euro still can be very interesting to trade when you have maybe some crosses in mind. Okay, keep in mind that that on some crosses, if you will try to trade between central banks, some crosses can be very interesting. Now, euro pound is definitely one that can be very, very interesting here. So we recently stopped at this upper trend line of this triangle. Okay, so we could be looking for a new leg to the downside that will finally take us below 2023 levels, which I still think it's very, very, very possible. Very, very probable, if not possible. So I'm looking for more weakness here. Also, on Wednesday we have the UK inflation data, and last reading was 3.2%. Now the market expects 2.1%. That's, in my opinion, pretty big expectations here regarding inflation. So if there will be a miss of these figures, let's say that inflation will be coming down, because market always trades on expectations. So if there would be inflation still cooling down, but only to, let's say, 2.5 or 6%, it still can keep pound in uptrend, okay, because they missed the expectations. So in such case, we could still see euro pound moving to the downside. Also, if you take a look on cable itself, it's doing very, very well here, and we've been talking about this in the last few webinars. We always covered it, and so far it's moving very nicely. Actually, we completed this counter trend movement in 3 waves, and now we are running here again in 3 waves to the upside. But this can easily extend to not to be a wave C, but to be a wave 3 of an impulse. Because whenever you can see only 3 wave drop from the highs, like here, if I zoom out a little bit, that was high, that goes back to March. Whenever you see 3 wave drop, okay, from the highs, it means that at some point this 3 wave drop should be fully retraced. Okay, so that was a 3 wave drop, and this at some point should be fully retraced, meaning that market should trade at some point at these levels again. But the question is, will this unfold from current levels if we see an extension of wave 3, or maybe after more complex consolidation, if suddenly, let's say, pair drops back below 1 to 6 levels. But for now, at least in the short term, it looks like there can be a bit of more upside, I would say, as long as we are trading above that level. So that's a pretty interesting support on potential dips this week. Watch 1.2640 area. Okay, as long as we are above that level, I just think that this could be attractive support. If we retested it, I would expect a bounce. Okay, of course, if we drop, as I said, back below 1 to 6 or even lower, then I just think that there will be longer pause than I currently anticipate, but still it will be part of this higher degree uptrends that I still think will show up because of the weaker US dollar. But all may actually depends on the UK CPI print. Okay, so maybe we'll not get any kind of a new interesting price action till then. We will see. Also, also if we take a look on Aussie. Okay, so here's Aussie. It's moving sideways, actually not breaking out, and I'm not really sure if this will happen anytime soon, because as I said, we have stocks potentially moving into this fifth wave, so I'm not really sure if we can see extension higher right now on the Aussie. I just assume that we will stay consolidating here through summer. So watch potential reversal down into wave E. You are trading close to this trendline resistance and the 61.8%, okay, of wave B measured from end of a wave C. So that's how we use the fib levels when we are talking about, when we are tracking triangles. However, Aussie was still doing quite well recently because of the higher stocks in China and because of copper. But even these extensions, what I've been looking on hangseng index, could potentially there we could potentially see some pullbacks. So if that would be the case, even there it is. Okay, even this one could see some pullbacks, and of course Aussie could do the same thing. So maybe we'll see pullback into wave 4 here at some point. Okay, by the way, you are actually just right now at the high at the head and shoulders projection target. So certainly there can be some resistance not that far away, but of course that's a very strong rise, and I will be expecting more upside, but I just doubt that these markets will continue with these sharp extensions from current levels. Just be aware of pullbacks. Maybe much more interesting than Aussie at the moment could be Kiwi. Keep in mind that on Wednesday, I think it's on Wednesday, we have rate decision by for Kiwi, central bank from New Zealand, and cut is not expected anytime soon, not this year. I think that it's projected for second quarter of 2025. So maybe this somehow, I should say, they are not holding this dovish view, so possibly this can keep Kiwi in uptrend. And if you look closely here, we have some very nice and strong accelerations here. So rather than Aussie, which does not have the best wave structure on an intraday chart, I would maybe rather pay attention to Kiwi. We have some very nice potential ongoing impulsive recovery here. Okay, so watch out for possibly more upside after this consolidation. I really like the idea that it's Monday, okay? And whenever you see, I will say it this way, okay, whenever you see a very strong uptrends, okay, and then you have a Monday consolidation and prices come back to the downside, that usually represents quite nice attractive pullback to join this trend, okay, because on Mondays you have these flows that can be reversed on Tuesday. That's why we called Tuesday reversals. I'm sure that you already heard for that. So that's something that I would keep an eye on. So support is at 60.80, but if it drops below 60.40, then I think that we will fall into more complex and deeper correction. But still, I believe as part of a recovery. Clearly, we broke out of this diagonal back at the start of May, so I would be looking for consolidation and then more upside after this one is over. Also, let me just check my notes here. By the way, if anyone has joined right now, please subscribe, press a like, and let's try to bring more viewers to this webinar. Also, S&P 500, which should be, it's here. Here's actually VIX, known as Fear Index. So firstly, I want to look in that one. You can see that we are slowly coming into this area, okay? So if, as I said already earlier, very similar but opposite situation on silver. Whenever you see some markets moving into some extremes, keep in mind S&P 500, these stock indexes are moving to these new all-time highs. So it means that there will be more and more people that will try to join this ride. But if you take a look on VIX non-sphere index, we are also moving here into this potential extreme. So market is confident, traders are confident with the current rise. So that's when we should be a little bit careful and just be aware what may happen through summer. Okay, I still think that till then, till summer starts, we could already have some evidences that could take us into deeper corrections on stocks. But for now, still everything looks fine, at least in the short term, as I will show you in a second. But still, just be aware that markets are not always in straight lines. There are pullbacks, and that's definitely expected when we see VIX coming into these extremes down here. Also looking at this one, okay? So that's the S&P 500 cash market that's about to open in 10 minutes or so. So here we are tracking a recovery mode, okay? I will not go to the higher time frames because I just want to keep things simple. So here we have in a recovery mode. What happened before that is market unfolded only 3 waves to these lows. So if that was a correction and we think we are in a new bullish phase, we should see 5 waves up here on a, that's, by the way, that's hourly time frame. But we are not seeing 5 waves up yet. So I think that there can be some opportunities after pullbacks. We will see where markets will open. We are currently seeing futures trading slightly to the downside. But I think that this wave for pullback, whenever it shows up, could be very interesting to join the trend. We have this US CPI release going back to Wednesday, which is at 5,250. That was the gap. And usually, not usually, but sometimes in most cases, these gaps that are not far away from the market, they can be filled. Okay, so I think that if we'll see this wave for retracement at some point coming back into this gap, this could be a very interesting and attractive support. Okay, so that's when I would be looking for a new push to the upside. We also have here this previous highs as well, so certainly this could be very nice and attractive support area. Okay, also if you look at some of the single stocks, we have Nvidia here. As you know, Nvidia earnings Wednesday, and looks like that we are resuming back to the upside for a wave 5, but you never know what earnings will cause. If suddenly, let's say that earnings will cause a drop in price and you see a gap to the downside, we could easily just stay in a more complex corrective wave 4 rather than turning bearish. But there can be, again, that expectations will be that market or prices will beat expectations, and you will see fifth wave reaching new highs. But that's when, again, we should be very careful, okay? Because let's not forget how market got excited here on earnings back in February, okay? But then even this lag has seen almost full retracement to this back to this earnings date. So even if we see strong earnings, you will see prices in a fifth wave. Again, 1,000 figures, as you know, that's a very strong big level up there. Everyone is watching, and we could maybe just touch it and you will see a pullback. So if we see a break to new highs, especially after earnings, just be careful there. Don't just jump right into it. I think that there will be again some retracement not that far away. But at least for now, it looks quite good, because still we have at some point to break these highs, because if that was a corrective wave 4, which by the way has made a very almost perfect 38.2% retracement, then wave 5 is still coming and should still breach these highs. Now if we try also and maybe align it with crypto, you can see that finally there can be also positive for Bitcoin itself if this market will resume to the upside. Also I have here AMD, this one is also recovering, but I should say that this drop here, which was quite a big pullback, okay, did not make this overlap. But one concern is, for me, is that we don't have a clear price action to say or confirm that this is a correction. It could be a complex, very sharp WXY, sharp correction, because this one was very complex and deep one for a wave 2, so that's certainly possible. But now someone will ask how to trade this one. Well, for now you still have 3 waves up, right? So it's not easy to trade, but it would be certainly much easier to jump and look for potential longs if you will see at some point these 5 waves to the upside, and then you wait a pullback and look for potential entries. Or if, let's say, market will just make a very strong extension to the upside to give us confirmation that we are in a strong wave 3, then someone could look for potential re-entries after a wave 4 pullback. Okay, so for now, at these levels with 3 waves up and where third leg equals to the first one from the most recent lows, that's the very tough situation right there. Okay, now if we also take a look on Apple real quick, because we also covered this one last time. So last time I said we have 5 waves down. This leg is completed. The only question is, was this part of a flat correction? Okay, and we are going back to new highs, or are we going to see only ABC rise and we will continue to the downside after this ABC rise will be finished? But what's the most interesting right now is that we have these 5 subwaves, okay? 5 subwaves up from April lows. So these 5 waves suggest that market should continue higher after a 3-wave retracement. And you also have this open gap down here. So maybe this gap, if the price comes back into it, could be quite interesting and attractive for potential next buying opportunity. So as long as we are trading above that level, I just think that pullbacks could be quite interesting here. Someone is asking, can we get some gold? Actually, we just covered silver today, but I'm not sure if you are our member, Coolio, but we certainly do a lot of gold analysis as well there in our premium section. So make sure to maybe to visit our page, because unfortunately we cannot share everything here for free. Obviously, I'm sure you understand this. Okay, now finally let's take a look on cryptocurrencies. So looking here at total market cap, we are still, I believe, in a recovery mode. Even short-term swings are certainly pointing to the upside. Maybe it's not a bad idea to keep an eye on MicroStrategy here and some other related very strong stocks that have a strong correlation, I mean, with cryptocurrencies. You can see that this one is could already be resuming higher into wave 5. So if this trend will continue, I just think that sooner or later even cryptocurrencies could jump, because they were lagging a bit. As you know, we have seen cryptocurrencies also making pullback. I think that was the same time of low or something similar when also the S&P 500 fell. It was this escalation in the Middle East, if you remember if I remember correctly. So that's when stocks also stabilized, other markets and assets as well, when the fear was at extremes. How funny, huh? So what we are seeing right now, well, we are seeing the price recovering pretty nicely. That was also potential reverse head and shoulder formation, and you have this trend line support that was retested back at the end of April, start of May, and you have this trend line that was broken and also later on reacted as a support as well. So I think it's pretty interesting to see more upside here. If we try to maybe to check at some potential targets of the head and shoulders formation, could be at new highs. Wave C targets, let's say that we are in a wave C, so very important strong resistance area to watch would be around 70,000, also the round figure. So let's see what happens up here for this week. If stocks will see suddenly a massive strong reversals, then even cryptos could stay could possibly stop here and stay sideways before they continue higher. But overall, I just think that it looks very, very interesting, that sooner or later this trend could take us to new highs here. Also looking at some liquidations here, haven't seen anything very big, but we have this one is around 67,000. Let me just check something. Actually, we are just here. That's the 67,000. The next big level to watch is just above 70,000, but not really any kind of extreme orders here regarding the liquidations, also not on the downside. So maybe that's good, because market has no reason to move to the downside if there are now no liquidations. Probably there were plenty of liquidations back in April when we have seen these pullbacks. Okay, traders, I hope that you enjoyed this presentation. Please, again, make sure to subscribe to our channel, press a like, leave us a comment if you're watching this recording a bit later. Check our website wavetraders.com for more information, or obviously make sure to follow us on our social media and Twitter channel. Traders, have a good trading week. Bye.